Hello everyone, welcome to this online lecture evening about investing. My name is Lotte and this evening is organized by SIT Utrecht, the Student Association for International Relations in Utrecht. Every Tuesday we organize an intellectual evening like this one, but we also organize activities like drinks, parties and trips to other countries. Tonight, the first half hour, we will listen to two finance experts. Joining us are Bert Scholtens. Hi Bert. Who is a professor in sustainable banking and finance at Groningen University. And he is going to talk about how to invest best and make money out of your financial capital as an individual. Also joining us is Robert Dykstra. Hi, Robert.
Hi, good evening.
Hi. Robert works at the Department of Active Ownership at Robeco. He is going to talk about his work and how the bank invests in, for instance, the green economy. After about a half hour, the audience, you will be able to ask questions in the chat. Don't hesitate to ask anything. And then one thing I want to mention as well is that at the end of the lecture, you can give us feedback on this lecture. There will be a link in the description. So I will give the floor to Bert.
Thank you very much, Lotte. My name is Bert Scholtens, and I'm to share my presentation with you about sustainable investing. And this is a topic I study and teach about in Groningen University, where I'm also affiliated with the University of St. Andrews in Scotland. But yeah, if I have to go to quarantine back and forth, I stay put in Groningen. So sustainable investing, first it starts with investing. So as an economist, you should realize that your income is either consumed or saved. So what you do not consume is by definition your savings. And these savings are by definition investments. So even if you don't do anything with it, it's still, according to the system of national account, investments. However, that's not what people in general and students in particular think if they heard the word investing. So they go to Wikipedia, at least lots of Groningen students and St. Andrews students do, and they find that to invest is to allocate money in the expectations of some benefit in the future. Now, this benefit is called a return, and that can be a gain or a loss. It can also be negative, of course, from selling the property or an investment, from the appreciation or depreciation of the capital, or from the investment income, like dividends on stocks, interest of rent on houses, and so your landlord gets your rent. And it can also be related to currency gains or losses due to changes in exchange rates. And you, as international students, are interested in international topics, should know the importance of exchange rates. Now, investors generally expect higher returns from riskier investments. And another feature you need to know is that the diversification of the investment portfolio has the overall effect of reducing risk, because the returns are not perfectly correlated. So that's why you say basically you should not put all your eggs in one basket. But yeah, that sounds not as sophisticated as modern finance theory. Okay, so where are we? So you should realize that your income and your costs are not the same over time. So this is a very stylized picture of the financial life cycle of Homo sapiens. And so in your early childhood, you were born naked and very poor. You only cost a lot of money, so you have really a negative income. And let's hope that you look into follow the curve, that in your mid-20s, your income will become positive. So that's great, because then you can pay off the huge debt you have incurred by studying in expensive Utrecht. Now then it's very stylized. So this is taken from an American a textbook, and they think that you plan for a family. Yeah, but maybe not, we don't know. But then, so income increases over time and career develops, and then just before retirement, you're on the top of your income, and then your income starts to reduce. So typical costs and earnings factors are, so as a student, you have to pay for healthcare and education. Yeah, you want to recreate and you want to have holidays. You have your sports and hobbies, but to a large extent, you're quite dependent on others or on the Informatiseringsbank, which is not the nicest thing to be dependent on, although they have a very low interest rate. Now, then it becomes interesting because you start to earn money. And that, then they have these boxes. It's very, very individual. This is just for Joe Sixpack. And then at the end of your working life, so you have to retire. So, for example, for university staff, it's mandatory that they stop being employed. Nevertheless, you see a lot of great people working around because their partner doesn't want to have them at home because they are spoiled. So they keep sticking at the university buildings until they fade away. But normally they don't get an income anymore and have to take a pension, and that can be the pay-as-you-go system, which most countries have, or the capital-funded system as we have in the Netherlands, or if you invest your money wisely with Robeco. But Robert Dykstra will inform everything about getting wealthy with Robeco. Now, the main investment object for most people is real estate. So that's often ignored, but say for most people, most of their investments is in their real estate. And the return from this real estate is rent and capital gains and losses. Another important investment object is bonds. And there's not James Bond, but that is bonds from, in Netherlands, especially from the sovereign, from the government of the Netherlands, and from very large corporations. But most is, say, government-related bonds. That's very different in the US, where corporates are the most important issuer of bonds. And then we have stocks, and that's where we teach a lot about in finance. Stocks, that means the ownership of shares, and that you have a share in a company, and the stock can give you a dividend, and you have a say in the annual general meeting of shareholders. And Robert will also inform you about that, given the department he's in. And the stock can also result in capital gains or losses, because what goes up can go down. Another investment category, asset class, as they call it in finance, is commodities. Let's say minerals, foods, energy products. They also have gains and losses, and a bit mysterious is the convenience yield. And so a latent return from owning the commodity. And then, not very spectacular, you have a savings account which pays you a bit of interest. But returns are risky. And it can be the case because of firms can default, and even countries can go into default because of inflation, which eats into your returns, and because of very volatile market movements. Now, what's the return on investment? So that's where I'm curious. And I will now stop sharing this screen and go to another screen where I try to get your opinion about this. So now you have to start working. And I use Mentimeter. So you please go on your phone to menti.com or on your laptop or tablet. And please go to menti.com and use the code that is on top of this page, 2348041. And answer the questions, please. So I don't know how many students are in this lecture room, Lotte, Leon. But let's have a look.
A few.
A few. Okay, let's have a look.
Oh yeah, some people are in there. So hopefully some people are getting their answers.
So we now have 50 students answering the question. So
okay.
And they can answer from totally unlikely to have these options to sure they will going to do so. So the first option is transfer the sum into my bank account immediately and consume it this academic year. So here we see that the largest group says totally unlikely that I will be doing so. If we go to investing the money with a sure return of 3% per year, and I will have access only when I'm 40 years old, we see that it's much larger. So the largest group here is 5, and they score 8 out of 10 here. Then investing the money with an uncertain return of 5% per year and access when they are 40 years old. So that's about, I guess, 20 years from now. So here we see the largest cohort in have scored 3. So you see the distributions. So although the scores 5.1, 5.6 are not very different, the distributions are. So we have a clear group who are quite sure that they will invest against a certain return of 3%. And here the opinions are much more mixed. But in all cases, in all 3 cases, we don't have the normal distribution. As some of you take courses in statistics, some of them hate that, don't hate this. Statistics is super, but realize there's nothing normal in real life. So there is no normal distributions. But we scientists can torture the data until they become normal. Now, another question for you. You're already making your homework in advance. That's super. But I wait for another couple of students to enter. So you invest 25,000 euros and the return can be 5%. What value is achieved 47 years from now? And 47 years from now, meaning that on average you will be 68 years old. And now that's the retirement age. But I'm also quite sure that 47 years from now, the retirement age will be a bit higher. Okay, so no one else is going to answer. So let's see the distribution. So we see that of the 12 students, 1/3 voted for 250,000, 2 students for 32,000, for 50,000, 1 for 100,000, and 3 for 150,000. And the correct answer, though, is it will yield almost a little bit more than 250,000 euros if you invest 25,000 euros today and wait 47 years. And the average return is 5%, which doesn't sound incredibly high if we look into the past performance of Robeco. Now, I'll go back to my presentation, if you bear with me for a moment. I have some hiccup going on, but that will be solved. Okay. So we continue with the presentation, and this shows the magic of what we call compounded returns. And the magic of compounded returns is that you earn returns on your returns. So in red, you see the development of the value of your portfolio of 25,000 euros, where you begin with over time, against the return of 3%. In purple is 4%, and here is a return of 5%. So in the beginning, well, it doesn't make up that much differential. But in the end, after 47 years, you see it is really huge whether you invested against 3%, it gives you 100,000 euros, or 5%, 250,000 euros. So that's a super big differential. Now, the topic of today is sustainable investment. What is sustainability? According to the World Commission on Environment and Development, also the Brundtland Committee, after Gro Harlem Brundtland, the Prime Minister of Norway at that time, sustainability is a development that meets the need of the present generation without compromising the ability of future generations to meet their needs. So that's the definition of sustainability. And it in fact tries to align social, environmental, and economic interests. And so, and only the what they have in common is defined as sustainable economic development. Now, how to visualize that? So, Carl Volker and Will Steffen and Johan Rockström from the Stockholm Resilience Center, with whom I collaborate, have developed the notion regarding environment of having planetary boundaries. And here you see the circle, which is somehow fuzzy though, but if you keep within this circle, we have a safe operating space regarding climate change, novel entities like alien species, ozone depletion, aerosol loadings, acidification of the ocean, biochemical flows regarding nitrogen and phosphor, use of fresh water, and changes land system and biosphere integrity. Now, it's very straightforward that biodiversity and biochemical flows are way, way out of hand. So it's a complete mess on our planet in that regard. So you should realize that the number of species is in absolute decline. So if you look back for decades, for aeons, you see a radical reduction in the number of species, not only in the number, but also in the biomass these species have. And that's all because of our human behavior. Next to that is the biochemical flows. There is an abundance of phosphor and nitrogen in our environment. And so in the Netherlands, probably you know about the farmers' protests. And of course, farmers have to earn a living, but they should. You see that most of this nitrogen flow is resulting from our farming practices we are having. Now, there's a lot of fuss, completely rightfully so, about climate change, but compared to the biosphere and the biochemical processes, it shows that the problem is less disastrous than in the other two areas. But it is very, very threatening because of the tipping points it will move. Now, here enters sustainable investing, and that is investing a long-term oriented approach which tries to integrate environmental, social, and governance factors in the research, the analysis, and the selection process of assets, like the stocks, bonds, real estate, commodities, in an investment portfolio. And it combines the fundamental analysis, so looking into these social and environmental indicators next to financial and economic indicators, and engage with an evaluation of these factors. So the sustainable investing aims to better capture long-term returns for investors to benefit society by influencing the behavior of the organizations it invests in. And that's where Robert will illustrate with some cases, I suppose. Now, there are different strategies. So best in class is picking the best in whatever industry. So even in airliners or power plants, whatever. Sustainability themed is that there is focused themes on, say, biological organic farming or renewable energy. Norms-based cleaning relates to international norms like from the United Nations, and that you stick to these and invest along the suggestions of these international organizations. ESG integration is the integrating environmental, social, governance indicators already when you do your financial analysis. Engagement in voting is that you use, as I mentioned, that if you own a stock, you not only have rights on dividend, but you also can speak up at the annual general meeting of shareholders. And that is raising your voice in protest against the business model or whatever. And very popular is exclusions. So that is, you have screens, you screen out controversial items you invest in. And then tiny yet is what is labeled impact investing, which has a deliberate, extra financial objective. Next to having a financial objective, it also has a non-financial objective. So these are the basic strategies being employed, and you see clearly the exclusions, say, either based on norms, on values of people, is the most popular one. Then we have engagement in voting, and then integration, and the other are much, much smaller. Now, let's go back to Mentimeter. So I'll stop sharing and we'll try to move again to the
Bert, is this your last sheet then?
Yes, this is my last.
The time. Oh, that's perfect. Yeah.
If I succeed in sharing. If I succeed in sharing. Oh, I see that students already worked in advance. Very well done, very well done. So what assets do you think have the biggest sustainability impact? So largest is real estate, but yeah, opinions differ a lot. And I think that students are very right on that, because you can say building real estate costs a lot of materials, and given that they have a very long lifetime, if you insulate their real estate very well, you can save a lot of on energy being used. You're more pessimistic about impact via stocks and bonds. And I guess that Robeco will inform you about this. And with commodities, well, you're quite, we have a clear bimodal distribution here, you're not sure. But also here you can, if you own commodities directly, say own the mines where commodities are being sourced, then you can have a huge impact. But if you own commodities via commodity futures, let's say commodity derivatives, then there is hardly any impact at all. And what do you deem a controversial activity? Well, that's very mixed, of course. We see that with alcohol, not controversial at all. And there is some students who think it's medium controversial. With abortifacients, not controversial for the largest group. Adult entertainment, well, here the opinions start to differ. For some, it is not controversial at all, whereas others regard it as highly controversial within SIP Utrecht. Animal testing is not controversial, so you don't mind torturing animals, cute rabbits for cosmetics, but that's your opinion. And however, fossil fuel exploitation is regarded as highly controversial. Wearing fur is so too, even more than it's the most controversial item with this group of students. And I'm a bit puzzled, because animal testing is, well, not very controversial with a large group, but the fur of these animals apparently is. Okay, but that's up to you. So in the drinks party element, then you can discuss this. Eating meat is, again, not highly controversial. And also nuclear energy with Utrecht is not controversial until we put a nuclear power plant in Amelisweert as compensation for not having the A27 running there. Okay, so last question, what do you feel important when you, for investing, having a broad portfolio, how you've paid attention, risk returns and ethics, social sustainability, environmental, social and governance indicators, likelihood of getting my money back, so this person is clearly risk averse, and sustainability, and returns values that align with mine, great products I use myself, profitable company, future growth, and tailwind industries. But this is implemented only with 5 students, but now Robert knows what type of customers he will be having in about 3 years from now. Robert, the floor is yours. I stopped sharing.
Thank you very much, Bert. Yeah. Robert, you can, the floor is yours indeed.
Perfect. Thank you. Just getting my presentation up. Let's see. Should be coming across clearly.
Yes.
And yeah, thank you, Bert. Great presentation. I think you covered the introduction to sustainable investing as a theme, and then also even going a step further into the specific strategies that it involves quite nicely. And happy to say that all of those SRI capabilities is something that that Robeco has experience in. And I would even venture to say that that the true value of SRI capabilities is achieved when you're combining some of those strategies. So I'll briefly just talk a little bit about Robeco. I mean, we're an asset management company that has quite an extensive history. Founded in 1929, so been around for quite a while, and has experienced the peaks and valleys of different economic cycles. And in the past 30 years, really, we've picked up on one of the greatest trends, that being sustainability investing. And the longer it goes on, we realize it's not just a fad; it's here to stick around, and it, to this day, continues to gain momentum and interest from investors, both institutional and retail, across the board. So that said, just to make things a little bit more maybe concrete, within Robeco, sustainability investing is really integrated throughout the entire organization. We have a center focused around our investment teams, which are uh, the different portfolio managers that execute all the investment decisions. But supporting them is are several teams. One of which is the active ownership team. That is what I'm a part of. I've been at Robeco now nearly 3 years. And within that team, I'm responsible for a lot of our proxy voting activities, and we'll get to that in a minute. But that's related to the voting and engagement side of sustainability investing that Bert alluded to earlier. And then additionally, we've got our own in-house sustainable investment research group, which provides the information on specific companies in terms of measuring their sustainability performance, which can also sound rather high level at first, but the devil is in the details, as with most things. And then additionally, supporting our investment teams, we have with our SI Thought Leadership team, which is just a group that tries to be as close with the cutting edge of a lot of academic institutions with regards to sustainable investing, right? It's a big trend. There's always new papers coming out, and there's a significant demand for a lot of research into sustainable investing, and also trying to link that back to different investment capabilities and the potential returns in the long run that a particular sustainable aspect might have on traditional investment strategies. And then, of course, we have what you would call our outreach team, our client portfolio managers. Robeco is an institutional investor, so a lot of our clients are institutions, whether they be government affiliated organizations, or pension funds is a big one. So that's those are the kind of clients that we serve, institution to institution. So just to take a deeper dive into what engagement is, right? We throw that word around a lot: engagement. And basically, at Robeco, we take a thematic approach to engagement. You can also take a thematic approach to investing. And here you'll see on the left side of the screen that breakdown between E, S, and G. So the three main pillars of sustainability investing. Basically, within the active ownership team of Robeco as a whole, and really any asset manager that conducts engagement, the idea here is that through our holding of a stock, we can actually leverage our voices as shareholders, and nudge the company or enact them to behave in a more sustainable way, some way that benefits society at large and helps them take into account a broader range of stakeholders, and not just their shareholders on a quarterly basis that are looking at earnings reports and want a larger dividend, right? So we take a thematic approach to this, because you could say, okay, you're engaging on sustainability, but what does that mean? Well, it means different things for different companies, for different industries, even for different clients. So we try and create a framework around our engagement process, work that honors the complexity of sustainable issues. And by doing so, we break it down into topics that are shuffling on a 3-year basis predominantly. So issues ranging from cybersecurity to biodiversity loss, right, to human rights violations and supply chains. These are all issues that a variety of companies can start addressing more significantly. And that's something that we do through our engagement process. So an engagement program runs kind of like throughout a 3-year period. And then we set clear engagement objectives at the start of these programs. and then monitor our achievement towards reaching those objectives throughout that three-year period. And we're not negligent of the fact that sometimes this is unsuccessful. Sometimes you expect a company to behave in a more sustainable way after 3 years because you're leveraging your position as a share owner, you're the owner, and that doesn't always work. So what can you do then? Well, you can either escalate the engagement itself, or you can exclude. And that means that you're excluding them from your investment universe. And that is, in a lot of senses, the biggest signal that you can send to a company to get their act together. And that's, as Bert alluded to earlier as well, a very popular SRI strategy. In terms of escalating engagements, that's something that we do, and you'll see that at the bottom of this slide, it's listed as a global controversy engagement. Now, that is something that is in line with the UN Global Compact breaches, and whenever there is a holding that that has such a breach in the UN Global Compact, so there's just a range of issues that would warrant such a breach, then they are excluded from our investment universe. And as well, that applies to certain topical things such as tobacco investments, arms, certain nuclear related fields, and a host of others, which are, these are things that we disclose on our website as well. There's another component to active ownership that is important to take into account here, and that is the element of proxy voting. I'll just move along a bit more quicker here. See, we're running out of time. And voting, if I had to put it in a more romantic way, it's sort of the voice behind the money. This is where you really get a chance to go to a shareholder meeting, potentially see the company in person, see the supervisory boards of these companies that you're investing, and actually convey any concerns that you might have, and you're actually voting either for or against who sits on the board, how much the executive management gets paid, and potentially a host of ESG, so sustainability related issues that the company needs to address. Robeco has quite a significant number of holdings across the world, so there's no way we're going to all these meetings in person. So we vote by proxy, we vote online, and that entails a lot of research that goes into determining our vote. It means that we have clear standards for all sorts of things that we vote on, and it's also proven to be a great tool to, as I mentioned before, leverage our share ownership position to enact a potential sustainability related concern that we might have. This is something that is coming under more and more scrutiny in the industry. We see news outlets looking at asset managers and trying to track how they're voting, if they are actually holding themselves accountable to the policies that they set out online, and also making sure that when asset managers such as ourselves say that we're engaging with a company and have been successful, was that really the case, right? Do we disclose to the public an outcome, a result that supports the engagement process that we say we had? That in a nutshell is active ownership. There are other facets of sustainability investing, like alluded to earlier, which we also take part in, such as ESG integration. So that is sort of a screening of companies for various capabilities based on a clear set of material ESG criteria per industry. And then that gets incorporated into potential investment models, which can be done automatically, or if we're talking about fundamental investing, then that is done potentially bottom up or from a country level as well. I'll stop there. I know we want to reserve quite a bit of time for questions, so I'll leave it at that.
Well, thank you very much, Robert. Yeah, you can ask questions in the chat, so don't hesitate to do this. I have a question for you, Robert, already. Is Robeco unique in this approach, or are there more banks who do this?
So there are a good number of sustainability themed asset managers, but I would say Robeco is unique in the sense that they're one of the first. I know a lot of organizations like to say that, oh yeah, we're the first, but that really was the case. I think it was in 1990 when they launched their first sustainability related product, and then in turn acquired Robeco, or at the time SAM, Sustainable Asset Management. Was based in Switzerland, and then acquired that and really ran with that theme, and has benefited, I think, in the industry from taking that pioneering role. In terms of what unique offering does that give an individual, ourselves, you and me, that might want to invest sustainably? Well, really, it's you're when you're giving your money to an asset manager, you're also to some extent taking a leap of faith, in the sense that you're trusting their experience in whatever investment capability that they're offering. When it comes to sustainability investing, I think your track record speaks for itself, especially at Robeco. But that's one of the, just to link it back to the need for more research on this in this field. When it comes to assessing traditional financial strategies, there's a huge backlog of stocks, how they perform in different scenarios. But when it comes to integrating sustainability data into that analysis, there really isn't too much of a time horizon that we want that's available for that, right? And we were really talking about 15 years at best. And so these sustainability metrics are things like CO2 emission data, but also supply chain management techniques, any sort of controversy that may have occurred. This whole concept of materiality in relation to non-financial metrics is something that that has only been captured nicely, I would say, in the past 10 to 15 years. So that's one of the downsides, but that is something that all asset managers across the industry have to deal with. So experience is that much more valued, I would put it.
Right. So it's a bit new, all still.
Relatively so, yeah.
Yeah, right. Okay, we have a question from Maya. What do you think the future of sustainable investment will look like? What is the next step? So this is a question for both of you, I guess.
Bert, do you want to go first?
Well, at my desk, I have a crystal ball, and I'll look into the future with such a question. But yeah, the future is a bit hazy in this regard. So, but let's be a bit bold. So there will be no future of investing if it's not sustainable. So you should realize. So yeah, Robert is still young, but even before 1990, before Robeco started, we already had sustainable investing. For example, in the Netherlands, we have ISN, which is now part of the Volksbank. We had Triodos, and they already had in the 80s, in the Netherlands, they had these funds, but they are really small players. So parties like Robeco, they really made it from a niche to a, what's becoming mainstream. Mm-hmm. However, in the 90s and also in the early 10s, even the Robeco sustainable funds were not really mainstream, but now it is. So if you look into how huge asset managers and institutional investors invest, they increasingly go for what they call responsible investing. So that's accounting for one of or two or more of the different strategies, and preferably combining these. So we see that increasingly this movement. So Europe and US are huge in that, but we also see that in emerging markets. Let's say in South Africa, you should realize that this goes, as already mentioned by Robert, hand in hand with data availability. For example, in countries like Brazil and South Africa and Malaysia, the stock markets, where the stock exchanges, where the stocks are being traded, were one of the first to have mandatory reporting about environmental and social performance of the companies. Now, also Euronext has that now in London Stock Exchange, but it shows it's not an issue that only happens in in high income countries. So it's really a worldwide movement, and I expect that increasingly investors who do not account for sustainable and responsible investing, they will be shunned. So they will be shamed, and they will become the coal, they will become the tobacco segments of the whole asset management industry. So I'm quite optimistic regarding sustainable investing. There will be no unsustainable investing 15 years from now.
Yeah, I think that's spot on. I would completely agree with it. And ideally, in the long run, I will work myself out of a job. Right? There will be no need to call it sustainable investing. It will just be investing. You'll have integrated that entirely into the mainstream idea of what investing is, from an institutional aspect, but also just from a what you'd call retail or individual investor component. At the end of the day, investing is not only uh, with the hopes of enacting some kind of societal change, although that is a large component of what sustainable investing is, but you're also looking for a return. Finding that golden middle where you get both of those is where the focus needs to be drawn towards. But at the end of the day, I mean, the investment industry, if you want to call it that, is also dealing with a lot of short-termism, right? I mean, we're investing in companies and talking to them, trying to get them to look at a long-term horizon, because a lot of other investors are doing that as well. Yet at the same time, you have investors that are just looking at a quarter-to-quarter basis. They might buy a couple thousand shares of Facebook one day and then drop it the next, so they don't care what happens with your data rights in 3 to 4 years. You've also got short selling that happens, right? So you're sort of betting against, which is also in contrast to the long-term sustainable mindset that you have as a institutional long-term investor. That's more or less how I see the arena of sustainable investing playing out. But yeah, the trend is growing, and sustainable investing is here to stay.
Okay, well, that's a good thing, I guess. Another question from oh, it's lost now. Well, I do a different one. Well, it's a question to you, Robert. How did you come to work in this field at Robeco? Did you aspire to end up here specifically?
Yeah,
the world, I don't know.
Good question. Well, I'd have to start at the beginning. So I'm half Dutch, half American, and I grew up in Florida. And when I was thinking about what I want to do with my life, at first I was relatively vague, and I thought I just wanted to do something international. More or less, that led me to the Netherlands, where I studied for my bachelor's a combination of political science and economics. This was at Leiden University College. And there I focused on sustainability issues, predominantly climate change, from a public sector side. And realizing already as a student that there's a lot of red tape involved, even from the academic side, in terms of addressing sustainability issues. I thought I wanted to go closer to where the action was, if you you could call it that. As that led me to focusing on sustainability programs at business schools, and then ended up at RSM. Then got introduced to the topic of sustainability investing as a whole, and noticed that I wanted to pursue that field. So with that in mind, I found Robeco, and at the time they offered an internship, and they still do, in relation to active ownership, and landed a role there, and got taken on board, and then got worked into the voting and engagement department at Robeco.
Nice.
And since my time there, I've only noticed that the importance of the role that we play within that active ownership department is only growing, internally and externally. So we've got clients, you've got regulators, you've got ratings agencies that also are all focusing on now, okay, what is actually happening in this sphere of sustainability investing.
Nice. Very nice. A question for Bert from Alex. To what extent does the Sustainability Action Plan impact sustainable investment? Will it be able to make significant change, or will its effects remain limited in your opinion?
I think Alex refers to the European Union Sustainable Action Plan, and it is set to fail. Why it's set to fail? Because at the same time, the European Union gives to current farming practices 350 billion euros without aligning this with their Green Deal. So you should realize that most of the surface in Europe is farmland. And for the Netherlands, we have 60% is farmland. So the whole countryside is farmland, and a lot of loss in biomass and biodiversity is occurring in that area. So you should realize that now, often in Utrecht, within the city of Utrecht, there is more biodiversity than in most of the farm fields in Flevoland and the adjacent province. And of course, it's easy to blame the farmers, but it's part of the European Common Agricultural Policy that has resulted in the mass murder of species in Europe after the Second World War. So you can come up with nice policies for financial institutions, but these financial institutions are intermediaries. So as Robert clearly illustrated, they can suggest during this annual general meeting on shareholders to vote, and hopefully they have the majority vote, but it is the company's responsibility. And so as a share owner, you own the share, you don't own the company. And so if you own a share of Heineken, you can't go to a pub and say, well, give me a beer. I'm the owner of a share of Heineken, give me the beer. So that doesn't work. So it's nice, the barman will laugh, and maybe if he's finds your joke, okay, he gives you the beer, but that's not going to happen. So you own a share, and the share gives dividend rights and voting rights, and not any say about what actually is occurring. So the Sustainable Action Plan is highly inconsistent compared to other policies. You should really keep in line that it should be consistent throughout. And that's also what was a problem with many corporations, that they had a sustainability officer. And all the sustainability issues were put aside to the sustainability officer. Yeah, and that doesn't work, of course, because then that man or woman does her utmost best to get something done, whereas everyone else in the company doesn't care at all, because we have the sustainability officer. She takes care of that. So it should be from the bottom to the top, and from the top to the bottom, it should be integrated in the whole business model and in the mission statement of the corporation. So that's why, Alex, I'm quite pessimistic in this regard.
Okay. Another question from Leonard. He says, sustainable investments often take a lot of time to develop and become profitable. How to plan investments in the long term? Is there a rule of thumb for investment terms?
Well, is there a rule of thumb? Not that that I'm particularly aware of. I mean, there are just certain, I think, key investment strategies if you're talking about the long term. And one of the things that's being developed as of late and has really picked up speed in recent years are these sustainability indices that incorporate some kind of sustainability rating potentially into a universe of stocks that you could invest in. This is on the equity side. So you've got companies that offer these kinds of large passive based sustainability indices. Morningstar, you've got MSCI, just to name a few. Dow Jones Sustainability Index is a big one. And these are often, for Robeco at least, these are sort of benchmarks that we base our own performance off of. So we strive to outperform these passive sustainability indices. But in terms of like low risk, long term sustainability related investment options, that is one of the biggest ones. And in the industry at large, you're seeing a shift from active investing to passive investing, and that's been an ongoing trend that's also escalating hand in hand with sustainability investing. Strangely enough, um, basically what that means is that instead of having a portfolio manager sitting behind a computer looking at stocks, deciding, okay, what should I buy, what should I sell, you're oftentimes going to trust an algorithm or some kind of index bundle of companies that that you're just going to invest collectively in.
Right. A question from Robert. Is now a good time to invest, as economies will likely begin recovering from the coronavirus in 2021?
Well, I would say it's always a good time to invest. It depends on what you want to invest in, and also what time horizons you have, what your expectations are. There's too many follow-up questions to give a definitive answer to that. But you will see that, I mean, especially in the times of a pandemic, right? Markets are extremely volatile, and for some, that is a time to put up all the shutters and just hunker down. For others, they go outside and they think this is a fantastic once in a lifetime opportunity. And I think the truth lies somewhere in the middle, depending on what you want to pursue and get out of your investments. Um, Equities have been rallying on all sorts of news, but in volatile times, I think the long-term mindset for investing still kind of perseveres.
Mm-hmm. You think the same about this, Bert?
Well, I have a strategy, but don't tell anyone else. Okay. And Robert will mute. So the strategy is that you should buy the stocks when they're cheap, sell them when they're expensive. So that's what you should do. Another thing you should do is that you should make it automatically. So once you get an income, that you every month, say 50 euros per month goes automatically to your investment fund. And don't sell, but you only do the 50 euros if you don't need that for, if your washing machine breaks down or if you want to party a lot. Only if you can miss this money, but make it automatically and forget about this. These are the two advices I give you totally for free.
Well, thank you very much. I also have a question more about individual investments. For me as a person, I guess. I have heard that you must not invest if you have debt. Well, all students, I guess almost all students have debt when they start their careers. Shouldn't we invest, or should we?
Well, I myself, as a former student, can definitely sympathize with that situation. I think there's definitely still room to invest. You shouldn't prohibit yourself from doing so based off of personal situations such as that. But just be reasonable about it. I think take it into account, set clear guidelines and expectations, like Bert mentioned. Set up some kind of automated deposit into some low risk investment strategy, and that can be done starting with small amounts, and then you build up. And as Bert already mentioned, there's the beauty of compounded interest is mind-boggling and certainly pays off when you're 50, 60.
All right. You, Bert, do you think we should invest with debts on our account?
This is highly individual. So for all of you, as we saw that the students have this different taste for, I had 3 questions about having 25 euros right at the moment, or invested against 3%, which is sure, or invested against 5%, which is uncertain. Then you see that people have different risk preferences and also different preference regarding consumption now or consumption tomorrow or consumption next year. And we see this being highly diverse within people, but quite homogeneous within particular social cohorts. If I ask my finance students, I get a different answer on average than if I ask students from medical school. So, and also even within these homogeneous cohorts, people are different. So you should keep that in mind. And also Robeco will never give a generic investment advice. You should do this, you should do that. They have a fiduciary duty to check the risk appetite and also the capability of people to bear risk. So
that's right.
That's very important to keep in mind, that you should not go for generic advice, but it's better to spend some money on a financial advisor. So what is best for my situation? That's the best thing to do if you have the money. But at this time, I think that most of you won't have that. And then you can do that automated. And in contrast to Robert, I would say, well, go for the high risk investment strategy instead of the low risk. And so it's better to have a small amount of money to start with, but then go for the high risk, because that you're with that money for quite a long time if you don't need that. So you should never invest money that you, if you already know that 1 year from now you need the money, don't invest. Invest for the long term. So you're not a professional trader, so don't invest for the short term, only for in the long run. And therefore, I would suggest for students, given that they invest in the most risky products that Robeco has on offer. And they also, not only Robeco, also ABN AMRO, Rabobank, ASN, they have different variations, different shades of risk available.
Okay, that's very clear. A question to you, Robert. It's also from Alex. To what extent is Robeco still a market leader now that the EU keeps implementing new regulations concerning the sustainability of financial products?
Yeah, good question. Well, Bert already mentioned the EU Sustainable Action Plan. That's something that we're spending a lot of time working on, because it's classifying all of our funds based on a criteria of, okay, how sustainable are they? Ourselves, we still see ourselves as an industry leader in that respect, although the sort of implementation of that classification system hasn't gone live yet, you could say. But it's something that we take into account seriously. I mean, the EU regulation is just one aspect here, but in other markets you've got different classification systems. So in the UK you've got like a tier system. You'd be tier 1, 2, or 3 in terms of your responsibility, or your classification as a sustainable investor, and that's based off of the FRC there. You've also got the UNPRI, so the United Nations Principle for Responsible Investment, that classifies pretty much every one of its signatories. So all financial institutions, asset managers, asset owners can sign up to this organization, really, and then be judged by the UNPRI on their sustainability performance, their responsible investing approach. We're sort of we're a market leader according to the UNPRI, so we maintain that position. We're constantly looking at it, but we have to be realistic here too, and say, well, our goal here is, at the end of the day, to have a financial industry that is completely sustainable, right? So I don't think we take a sort of famine mentality into sustainability investing, although at the same time, we're still looking to be as competitive as possible, and that keeps us on our toes, which is great.
Great. Well, we are almost out of time, so I will do one last question, and this one is for you, Bert. What do you prefer? Invest nearby, for example, in the Netherlands, to experience the impact, or make an international difference? Perhaps more a question for you both, but it was directed to Bert. Oh, your sound is muted. Yeah.
Again, as with the previous question, I don't see a particular reason to come up with a generic advice. That's very important that you should follow your own preference. And not only look into what's available in the investment boutiques, but really go shopping for what you really need and what you want. And that I can understand that the impact of having a local or perspective, so invest only in companies you can visit or what are within cycling distance from the Dom. That's okay. If that is important for you, do so. At the same time, if you are international, have been traveling around the world and don't make any difference, that's also okay. But it should be your decision. So don't blame it on your investment manager. They are there to help you, but you have to call the shots. So you are in the lead and they are in the advisory role. And you should realize that that advisory role is very important, and that's how they earn their money. And it's better to split, and that's an improvement over the past couple of years, that is the fees going to these advisors are separated from the products they advise you on. And that's really important that you are quite assertive in that regard. Mm-hmm. That would be my take.
Okay.
Yep. No, likewise. No generic answer is warranted there. But I can say from my experience that there's a financial product out there that will meet anybody's geographic preference. If you're interested in one country, one region, one industry within one region, I'm sure you can find it. And likewise, if you're interested in a worldwide product, it's also out there.
Okay, so it's all about personal preferences in this case then. All right, well, the time is already up. It's going so fast sometimes. I want to thank the audience for all their questions. And especially I want to thank you, Bert and Robert, for taking the time and effort to answer all our questions. It was all very interesting. Next week there will be an online workshop on the secrets of interviewing. And there are only limited places, so you should be quick to sign up. And don't forget to vote for this lecture by clicking on the link in the description. And so one more thanks to you, Bert and Robert, and thanks for watching, and have a nice evening.